This is Brian Decker with fourth and final segment of the Dirty Dozen, the top 12 scams on people that the IRS is warning our retirees to stay wary of these different scams that are out there, specifically different tax scams. Here's another one: false representation of tax aspects of charitable remainder annuity trusts, CRATs. Promoters tout the use of a CRAT to generate a charitable deduction, avoid capital gains tax on the sale of donated capital assets, and mostly tax-free income to the donor. While the first two tax results are correct in a CRAT, the income paid to the donor is entirely taxable, 100% taxable, even when a single premium immediate annuity is used to help generate the needed income. So just be aware, and we work with clients on this to get rid of capital gains tax, but it is a taxable income stream that comes back. Here's some other schemes that the IRS has warned about. Microcaptive insurance arrangements. In abusive microcaptive insurance structures, promoters, accountants, or wealth planners persuade owners of closely held entities to participate in schemes that lack many of the attributes of insurance in order to seek unwarranted income tax deductions. There's just a couple more and then we'll close it up. Next one is improper digital asset income reporting. The IRS asserts that there's an incorrect perception that digital asset accounts are undetectable by tax authorities. Unscrupulous promoters continue to perpetuate this idea and make assertions that taxpayers can easily conceal their digital asset holding. The IRS reminds taxpayers to not be misled into believing this storyline about digital assets flying under the radar of the IRS. They're completely tapped into those assets. Here's the last one: misusing a Maltese individual retirement arrangement. This scheme involves U.S. taxpayers attempting to avoid U.S. tax by contributing to foreign individual retirement arrangements in Malta or another country. These countries allow for contributions in a form other than cash and do not limit the amount of the contributions by reference to employment or self-employment activities. By improperly asserting this as a pension fund for U.S. tax treaty purposes, the U.S. taxpayer improperly claims an exemption from U.S. income tax on gains and earnings and distributions from the foreign individual retirement arrangement. So these are the top scams that are out there. We wanted to give you a heads up on all of them. So this is Brian Decker. Hope you have a great rest of your week.